Welcome back. A whole host of IT companies have reported their numbers. So Reema standing by the big wall with a report card on how it's been for IT companies this time around. Reema, not so bad?
Absolutely. The big takeaway from the big four in the IT pack is things are steady for now. So despite the macro uncertainty, fear of higher furloughs, execution for the big boys has been steady and the top line growth has not been as bad as what the street feared. In fact, 3 out of the 4 companies, TCS, Infosys, HCL Tech, reported a revenue beat. The only one who missed on the top line was Wipro. Now, talking about the Q3 numbers. On a quarter-on-quarter basis, as you can see, it's HCL Tech which tops the chart with a 5% revenue growth. Again, this is constant currency, quarter-on-quarter revenue growth, aided by strength in its seasonal products business. But on a year-on-year basis, look at the picture. All 4 IT companies have reported a double-digit growth. Now let's move on to the margin performance. Well, it was a mixed bag. On one hand, you had Infy and TCS, both these two, the top ones, missed the mark. Their margins were lower than what the street was anticipated. They were hit by a return to normalcy costs like travel. But on the other hand, HCL Tech and Wipro, both of them reported a solid margin beat and an expansion. The INR depreciation, there was an improvement in utilization aided by fresher hiring, which boosted the margin performance. Now let's talk about the deal wins. Well, despite some slowdown in decision making, deal wins this quarter have been fairly steady. It's not as bad as what the street was fearing. For Infosys, the large deal wins were at an 8-quarter high. TCS told us that their qualified deal pipeline is higher compared to the prior quarter, and Wipro told us that their overall deal wins in Q3 were at record levels. In fact, companies have told us that on the whole, the pipeline has been fairly strong. Though it's more biased towards cost optimization rather than your traditional digital transformation deal, and many of these IT companies, the large ones, are benefiting from vendor consolidation. So all in all, FY23 is going to go down as another good year for the Indian IT companies. Infosys is likely to top growth this time with a 16 to 16.5%. And if you compare it with the guidance that they had given at the beginning of the year, the growth rate is going to be a lot better. Again, for HCL Tech, despite the little bit of a hiccup that we had in the month of December, the overall growth rate is going to be at the upper end of what they had guided. So all in all, this is going to be a good year, and there is no amount of issues that people have when it comes to FY23. The problem is FY24 has not been finalized. The tech budgets are not finalized. The commentary suggests that Europe is a bit challenging. Decision making has slowed down, though there is no deal cancellation. Wipro also spoke about slower ramp-up in large deals, and there are furloughs which are hitting the IT companies in segments like BFSI, high-tech. On the supply side, attrition has moderated across the board. As you can see, there is a decline on a sequential basis, and hiring has been muted. For TCS and Wipro, the headcount has declined on a quarter-on-quarter basis. One of the reasons for the decline in the headcount is that attrition is coming down. So they need fewer people to fill up their workforce, their bench. But the other fear, which is feared by the street, is that companies are preparing for a slowdown. Now, whether that plays out or not, we will see. But for now, Q3FY23 has been steady for the big boys and not as bad as what the street had feared initially. Back to you.
All right, Reema, thanks a lot for that. So Q3 has been steady, and clearly the street is, happy with